Start recording. This, folks, is how they make the sausage.
Nothing is more expensive than bad information. Know the source. OneRadioNetwork.com.
Well, a very pleasant good afternoon to you. If you're listening live, you know that we've been having little issues. We just couldn't get Charles Nenner a good quality on the video, so we're on Skype audio, and I think it's going to be just fine. Thank you. And we'll throw up a picture of him so you can see what he looks like. Charles founded and he's president of the Charles Nenner Research Center, and he's got a deep experience with all the big boys, and Goldman Sachs and Merrill Lynch and these folks, and he was financial consultants. He's been in the business of predicting and helping people make money, and he does it by using charts, and somehow the charts predict the psychology of humans, and this is how he does it, and he's been very, very successful at it. And we're going to talk to him and try to understand how he works and how you might want to get involved with his little chart thing. You can go on CharlesNenner.com rather, and do a 4-week freebie and look at his charts, play with him for 4 weeks, and see if you make some money. I don't know if you can make some money. Charles Nenner is there. We have him on Skype audio. Charles,
I'm here.
Good evening. Good evening.
Hey, good to be here.
It's at 9:30 in Jerusalem, and you're in Jerusalem because it's a nice place to be, right?
It's the center of the world. It's a great place. Sometimes you have to move between the rockets that coming over, but for most of the time it's very nice.
Sometimes you have to move between the rockets? Wow. You're a brave soul. Yeah. You and Eliza? My good. Yeah. You think they're going to ever get it together and quit killing each other over there?
I doubt it. I doubt it. The world is getting more crazy by the day, and who knows what's going to happen. But it's really, I'm going back to the States in a couple of weeks, but it's not the United States. I remember when I came there like 20 years ago. It's a total different environment.
Yeah. Very challenging now with the people that are running this administration, and a lot of money printing, Tell folks how your charts work. I had asked before when we were on, but I'll just repeat it if you're on live. Just excuse me, but it's an interesting question. If more money printing is going to happen, we're going to have more inflation. Maybe the dollar is going to drop down. Maybe gold would go up. How would your charts and your little computer thing that you work with know that's coming if it's all on psychology?
It's all on psychology. As you know, I'm a medical doctor, and I did research in psychiatry, and I came up with cycles that psychiatric diseases all over the world happen at certain intervals. And then I saw a program about Wall Street that was the late 70s, and they said, why it's going up, why it's going down. I said, it can't be, let me look into it. I was then watching CNBC. The funny thing is that years later, I'm often on CNBC, and they said, how did you start out? I said, well, I looked at CNBC at your program, and it was such a nonsense, so I figured out to do it out myself.
They didn't kick you off after you said that?
No. So what we discussed before is that what happens is not important. The interpretation of what happens is important. So what you said is they can print money as much as they want, but if people are not worried about it, it doesn't matter. So what I found out is that things don't move at random. That means every so many months, every so many years, you can build cycles, and the psychology changes and markets go down. Not so much always based on facts, but often based on interpretation of facts. And then you come to the conclusion, to the question I said when I was teaching Goldman Sachs, he says, what if somebody kills Obama? Is the market then still going up because he says going up? So then we got into the theory of the quantum physics that says there's cause and result, but actually it's the other way around. It's first the result and then the cause. So I remember when I was starting in New York, I was predicting a 9/11.
Mm-hmm.
I was off by 2 weeks, and I told my wife that if the market goes up, you can take the subway, and if the market it really goes down, you have to take a taxi, because I thought they're going to put some poison in the subways and kill 1 million people. So the question is, how does it work? So we would say the market goes down because there's a terrorist attack.
Yes.
And my sister will say that the time that there could be a terrorist attack is only when the market has to come down. So the reality in different phases of what we know these days in science proves that things are not the way we think it is. Only it doesn't get really far into the financial markets. And one of the reasons is that there's so many important things to lose in the financial markets. So many people who are making a living, so they don't want to bring out anything, if at all, of the reality how it really works, because then you don't need those people anymore. So they write articles and they write newspapers, and they say maybe this and maybe that. And when you see them ask them a question on the media, they say, "Oh, that's a good question." I know it's a good question, but give me the answer. Nobody gives the answer. So it's a whole industry that doesn't want to get people to know how really to invest. So that's why I tell people, you get 4 weeks for free in our research. At least see how the big institutions approach markets. And you don't have to like it, but then it's a learning process. You have an idea what kind of knowledge exists on Wall Street that they're not telling you about.
Mm-hmm. So the idea that your charts showed you that the markets had to come down pre 9/11. You knew it was going to come down, but so humans had to create something to make it come down?
Well, let me tell you something. People don't watch. It was the same thing on the crash of 87.
Mm-hmm.
If you will bring up, and I challenge you bring up the European markets on 9/11 or the day before, they were already down 25%. They were crashing before the attack by the terrorists.
The day they were going down. They were going down before 9/11.
They were totally crashing half a day or a day before this attack. So then it's very difficult to say that because of the attack the market crashed. Now we got the crash of 87, and I was on Wall Street. I had my own firm in 87,
mm-hmm.
and European markets were down 40% before the opening of 1987 of the crash. But they still said because of computer programs of Wall Street, the market sold off. But the Europeans didn't have the computer programs, but everybody was selling.
Wow.
So I was approached by the FBI. I remember at that time, and I told them because what they thought is that the terrorists and terrorist groups would go short stocks because they knew there would be a terrorist attack. The market would crash, and they would make a lot of money on the short sales.
Mm-hmm.
So I tried to explain to them, look at the European markets. They came down already 40% before this happened. So that connection doesn't exist. But for one reason or the other, they don't look international. They look only what happens on Wall Street, and they seem to be oblivious to look what happened before that in the world.
Interesting. So day traders who look at charts and they play the charts and they kind of know when it's going to go back up and all of that, they're doing similar work just on a smaller scale than you are?
To tell you honestly, I don't know how they do it. What we do is we send out a chart intraday. That's for intraday people. It's a special subscription. And we say, look, this is the hourly cycle. It bottoms at this and this hour.
Mm-hmm.
And the market goes up and down, and it will go to this and this level. Because the next thing is, if a stock or an asset takes off, can you calculate how high it goes? Or you just have to wait till something comes out in the Wall Street Journal, and based on that, people are buying or selling.
Mm-hmm.
It has nothing to do with it. We also come up with a price target, which is not at random. And I always give the example, if you shoot a bullet in the air, and we learned that probably in classical physics in school, then you know more or less how far it will go before it comes down and how long it stays in the air. The same thing is, if IBM goes up with a certain momentum, you can calculate how long it stays up and how high it goes. And it has nothing to do with what you hear in the media, but they're so overwhelming, the media, that people think that they got some information from the media which is not reliable.
And you said that you can do better or more accurate even with Bitcoin because?
Because Bitcoin doesn't even have fundamentals that come out.
Mm-hmm.
So you're not even bothered by a news item or by fundamentals, all emotions. So the only thing you have to know is, like for instance, our upside price target on Bitcoin was 64,000. We went out.
Yeah.
I think it went to 65,000, and then we said it's going to 30,000. And then we wrote if it really gets below 29,000, it's all over for Bitcoin. So people ask me, what does it mean? It says, well, it can go to 1,000 then. It went to 28,800, just 200 points below. And then based on the cycle, it's now having a small bounce again. So people must admit it's all based on emotions. Now, the only question is, do you think that you can plot those emotions in a system or not? Well, we have the most complicated algorithms in all kinds of fields in medicine. Who knows where you use it? So why not over here? But again, people are conditioned not to think in that way. They're conditioned to think anything can happen. Listen to your broker. Listen to people who tell you a story. And it doesn't work like that.
So you created this algorithm to make this all happen because of your background being a medical doctor and science geek like you are, or a math guy like you are.
Yeah. I give an example. When it's full moon, then you know that a lot of women giving birth.
Right.
So you better make sure that you have enough staff in the hospital.
Mm-hmm.
Now, why that happens, we're not sure. But being a doctor, you have to adapt. And being a doctor, if they tell you the red pill works, you take the red pill. If the blue works, you don't know why. An economist says, and I had the discussion with, maybe people remember Abby Cohen and Goldman Sachs, that as long as she doesn't think that she understands it, she's not going to use certain indicators. So an economist thinks differently. An economist thinks that I have to understand it, otherwise I'm not using it. And a doctor says, as long as it works, I'm using it. I don't have to understand why it works. So I don't understand really exactly how these cycles work. I just, they work for so many, what is it already, 30, 40 years. And I expect them to continue to work. And I have a lot to say in a philosophical situation why they might work, but I'm not totally sure.
Mm-hmm. Yeah, I understand. So you have folks, and you get really close. I've been watching just for fun on your Bitcoin, and you've been really, really close to this up and down thing. It's like crazy how close you get, knowing what's going to happen. People could actually make money.
Yeah, we're doing very well. It's all the same system. I like to help people because a lot of people who have never done anything before and they do Bitcoin, they have no idea what they're doing.
Mm-hmm.
So at least take a look how we analyze it. If you have something better, go ahead. But I doubt if you have something better.
Yeah. And so it's interesting with the cryptos. You say it's even, you can get more refined because there's not fundamentals there. It's just. But Charles, doesn't it run on greed and fear, and that's what you somehow can predict?
Yeah. But the question is, can you predict how many days it takes or how many weeks it takes for greed to grow? So there are fundamental cycles that tell you it can take 60 days, it can take 2.5 months. So you know in advance when the extreme in the greed is going to appear. So you know you're safe until, I just go it in your way, right? Until the greed is at such a level that it starts to be dangerous. So you don't have to watch every day what the greed and fear is. You know in advance how many days it's going to take until people are not greedy. For instance, we know that if a market sells off and it stops selling off, people are afraid to buy. But a certain amount of weeks that if it goes sideways, the fear disappears and people start buying. So you know exactly how many weeks it takes, even if the market doesn't do anything, for people to have courage again to buy.
How do you know how many weeks it's going to take? Because doesn't everybody have free will?
No, because if everybody has free will, that's a discussion. But especially if millions of people are involved in something and they listen to the same thing and they interact, they have no free will. It neutralizes it.
I see. So the crypto guys and, well, even day traders and that, they're reading the same stuff, right?
Well, it's like a bit mystical because when I say the market, the Bitcoin goes down, then 2-3 days later, then the Musk says he's not going to use it anymore, and all the paper says that's why it came down.
Right.
And when it says now it's going to go up, then you hear a new story about Katie, or whatever her name is, that says the Bitcoin goes to 500,000. Do they have free will? We can spend a year on discussing that. It's not so important where it comes from. The interesting thing is if you would watch our research and then watch the news, then you see that the cycles are always there before the news comes out, and then everybody says, oh, I now understand the movement because of the news, and that's why nobody learns, because they think it's based on the news, but the news is based on the cycle.
The news is based on the cycle. So the news, the people's behavior is based on some deep psychological thing, mystical thing. Huh?
Well, let's take the OPEC. You know, the
Okay.
OPEC is supposed to have some influence on the price of oil.
Yes.
And usually it comes together in the weekend.
Yes.
Now, do they have free will or not? Well, the question is, I know on Monday where the crude oil price is going to be.
How do you
But
know
they
that?
did
How do you know
decide-
it? How do you know that?
Well, my cycle shows if it's going up and down, and how much is going up and how much going down. But they haven't decided yet. So they always will decide something that later, oh, that's why on Monday morning the oil price is going up or down. Do they have free will? I mean, I'm busy most of my life to watch financial markets. Maybe one day I will write a book because it's an interesting subject.
Yeah, it is.
But I'm more busy with trying to safeguard the money that people make and help them to work for their pension and the IRS. And we leave this for later date to
Yeah.
figure out if we can what really is behind it.
We're live here this afternoon with Charles Nenner. It is June 30, 2021. He is on Skype. He's in Jerusalem, where it's about getting close to, I guess, 10 o'clock or so. If you'd like to join us, he's on the 800 number, so we can't do that. But you can do Patrick at oneradionetwork.com. And this is one of the reasons why I contacted you. This is from William. I heard your interview with Greg. What was his name?
Greg Hunter?
Yeah.
Greg Hunter.
Yeah, Greg Hunter. And you were talking about the market going to really take a big hit. Do you still think that's going to happen?
Yes. The longer-term cycle stopped already in March. You get very strange. I just talked to my wife yesterday. I heard the S&P had the biggest up move since February. So you think huge things are happening, but they're not. If you look at the NASDAQ, the Dow Jones, the FANG is even lower than in March. Everything goes sideways. I think there's a big distribution. The big guys are selling slowly, very carefully. But if you believe the media, then, we're going to huge levels every day, which is not correct if you look at a chart.
So if you look at a chart, say the Dow, what do you see happening?
Well, the Dow is going sideways already for a long time, and it's like I said, longer cycles topped and are down for the next year and a half, and we're waiting for the daily cycles for the short-term top to join the longer term, and then we go down. Now, I have apart from that, the slogan says, buy low and sell high, right?
Right.
But nobody knows what's high, nobody knows what's low, right? So we have certain indicators, and one of the indicators we have that Mr. Buffett uses, and I don't want to make it too complicated, but he uses the total capitalization of the stocks divided by GDP. And it is far above 1929, far above the year 2000, far above 2008. It's just totally crazy extreme. So we know it's high. So if you want to have an objective idea what's high, it's very high. So that's one of the reasons that you shouldn't be long.
I see.
Now the other things I don't want to make too complicated. If there is something that's called a logarithm scale. So if I want to look at a chart from 1900 to now, it's such a big up move that it doesn't fit on a chart, so you make a logarithm scale. If you have a logarithm scale, I published this a year and a half ago, and you connect the high of 1929 with the high of 1967, 87, 2000, 2008. You're right now at that line. So what I wrote is, I have never seen a trend line of 120 years or 100 years that has been broken on the upside. It's possible, but it's not very probable. So we're just trading against that line that exists already connecting the tops since 1929. And that's the second thing. A third thing I want to bring up is, if you go to a broker, he says, should I invest in stock? He says, yeah, you should invest in stock because they go up about 6-7% a year. Did you hear that?
Oh, all the time.
Known, right?
Of course, all the time.
Okay. Okay. So how do they do that? They take 1900. They draw a line with an angle that shows you that the market goes up 7% on the average every year.
Mm-hmm.
The only problem is you're about 100% above that line. So in order to get back the average of 7%, you have to go much below the line.
Okay.
So these are very objective indicators, nothing to do with my cycle, that says you must be crazy to be in the market. Now, I know people in the market because people who thought they have $1 million away and they can live on a pension don't get any interest anymore. So what can they do? So what we do in the system is we now try to safeguard the money that people have saved. We make rate of return on doing other things, buying or selling ETFs, like you said, on natural gas, on gold, on currencies, on corn. Then people say, well, I cannot do corn. What do I know about corn? And I say, what do you know about gold? We also don't know anything about gold, right? It's the same system. At least it's normal valuations. Don't go in the stocks that the valuations are not normal and the cycles show a lot of risk. And just be on the sidelines. And then I say the difference between a Dutch person and American is American says, how do we make money? And the Dutch person says, how do we not lose money?
How do we not lose
it's
it?
time not to lose money.
Yeah. So if you look at big picture, 1929, 1987, and all that, there's something, I don't put words in your mouth. How would you describe the health of the Dow at 34,000 in the next 6 months or a year?
Well, it's stopping and cycles are down, and I said it's always the first time, but in my work that started in the mid-'80s, I've never seen longer-term cycles that didn't work out. A short-term cycle can be off by a day or by 2 days, but the longer-term cycle is not that it goes down for 1.5 years and the market goes up. That will be a new thing. So I wouldn't bet against it. Anything is possible, but I wouldn't bet against it. Now, I had the same problem with the bond market because bonds have been going up for 40 years. And we went out of the bond market about 20% higher. And I couldn't get the people out because they were so used. Bonds always go up. I said, well, cycles are turning down. Don't do it. I had the same problem at gold. We were long gold around 2,100. We sold. I said it goes to 1,650. I have the same problem now. Gold is going to go down more the next couple of weeks. And then people say, well, I stay in for the long run. And I know those stories. I stay for the long run. Gold goes down 100. I stay there for the long run. 200. 300. I'm getting worried. 400. Too much. I'm going to go out. And they don't. And then we go in, and they too weak or lost too much money to go long again. So all this conditioning of we're in there for the long run doesn't work out usually. So it has to be with cycles and timing, and you have to know what you're doing.
Yeah, kind of complicated. So again, though, specific on your predictions on the Dow, I mean, could we see a big, like, someday just wake up and get 5 or 10% loss? Possible?
Yeah, and something is going to trigger it.
Sure.
And then later we say, that's why it happened. And then we will never look for could we have known it before, because we don't look for that. Something happened. Let's say the virus becomes worse. And people start being afraid. We're going to close the airports. Oh, that's why markets go down. Mm-hmm. Well, or Iran is going to attack some bases of the Americans, or who knows what's going to be with China. Mm-hmm. And you don't see that it happened before. But the big guys don't lose money because they're out there before these things happen, because they know this is not the real reason.
The real reason is the cycles and human psychology.
Yeah, because somebody, when the market crashed in 2008, somebody bought, right?
Yeah.
Okay, so somebody bought because he knew what would happen the next couple of years. And those were not the small guys, those were the big guys. Because the small guys were losing their shirt. So the play is now we tell the small guys by the media markets go up, go up, go up, so the big guys can sell because they know for the next couple of years they want to be out. And this continues for the next 100 years because it's the big guys against the small guys, and the small guys are they put them on the wrong side of the market. That's the play.
And the big guys are getting out now in the market, correct?
Yeah, for the last half year, they're selling already.
They're selling. So we could maybe make money, just go short the Dow.
Yeah, but the point is, of course you go short the Dow, but you have to know when, because if you go short and the cycle is not going down for the next 6 weeks, you're going to have so many sleepless nights, you can't stand it anymore, so you're going to close out your position. So it doesn't pay to do it before the cycle goes down.
Oh, I mean, but couldn't you just go, what's the one that they have a little ETF on the Dow short? What is that, DOJ or something like that?
Yeah, we usually go long the VIX.
I'm sorry, along the VIX?
Yeah, the volatility index.
And what is that about? How does that work?
Well, you can trade the VIX. It trades now around 1450. We have traded 4 or 5 times the last couple of years, and we sold it at 50. So we go from 15 to 50. That means is that if the fear comes in the market and people hedge, then the VIX goes up, and it goes up strongly. So you don't have to be short anything. You go long the VIX, and that's how we usually play the market if we think it's coming down.
Mm-hmm. The silver bugs have been hoping that we'll see $50 silver someday. Do you think we will?
Yeah, but for the moment we're still down. I think we will see more weakness until after the summer. And we're just standing aside waiting for the cycle to bottom. It's very simple. There's nothing to be done.
Mm-hmm.
When the cycle bottoms, silver will go up again. And you can't force it. And if you know better, then do it. But, we know when the cycle bottoms, and we're going short a couple of days after the cycle low.
After the cycle low, why would you go short? That's what's going to go up.
No, we go long.
Okay.
Maybe you remember Martin Zweig, the famous Martin Zweig. He used to say the trend is your friend. So if the cycle is up, then you're going to be saved by the trend, which is the cycle. So even if you make a small mistake, if the cycle is up, go with the right direction, and you make money.
Mm-hmm. Mm-hmm. So what about gold? What's happening with gold? What are we today? 1770 something?
Yeah, so we have a bounce for 1 more week, and then we go down again. And we have been out since 2100, like I said, and made the bounce, and we short from 1900. And it will take till after the summer until the bull market continues.
Oh, so you hit the top at 21. You just got out. Boom. You sold and boom.
Yeah, because like I said, the top doesn't happen at random. You can calculate before where the top is. Now, if you don't know that, then everything is a total gamble. So I have no idea how other people make decisions based on what. How do you know if gold is going up or down? How do you know how much is going up? How do you know how long it's going up? I have no clue how they do it. But, we use it at Goldman Sachs, and Goldman Sachs was very famous of the rate of return they made. Maybe you were in the market for $200, $300, $400 billion. And you cannot base such investments on media or a news item. You can't get in, you can't get out. So you have to slowly get in when cycles start bottoming, and slowly get out when cycles stop, and not wait for the next news item on CNN.
When you were with Goldman for many years, did you all bet a lot of money on your charts and stuff that you worked with? Lots, big dollars?
Well, I did market timing, and I didn't do the real investing. I just, in the morning, we had the meetings. Is everything still on track? So you could say, listen, let's start buying IBM in 16 days at this and this level, and then slowly buy IBM. And when it goes up, when it's the top, and slowly, what's the price target, and now we sell. Mm-hmm. And usually what happens is that when you reach the top, people are so enthusiastic, so every idiot starts buying IBM. They don't buy IBM when it came down and you're accumulating stock. They buy IBM when it's at the top.
with the cryptos and Bitcoin, do you care that the sell line is that they're only going to have so many, and so someday it could be, I mean, theoretically, if they have a limited amount of Bitcoin, it could be, I don't know, $1 million someday. Do you care about that stuff?
I have no clue about anything. Because if it's so simple, why did it come down from 64,000 to 29,000?
I know. Why did it? But you knew it was going to do that. I saw your charts.
Right. The same thing with Ethereum. So obviously, this is not the way to think.
That's right. What's going on with Ethereum?
Well, it has the same problem. I mean, the cycles are down for a while. Again, see a bounce for another week, but the long-term cycles are down. Ethereum looks better than Bitcoin, but what I wrote the last couple of days is speculative traders can take a buy signal, but I'm standing aside. This is too dangerous for me.
So when you're not sure for your investors and yourself, you just stand aside.
Well, it's not that we're sure. I know the weekly cycle is down, and I know the daily cycle is up for a week. So the intraday people says, a week is good enough for me. Maybe have a small bounce. I'm going to go for it. But not all my people, all my clients are that sophisticated. So before they're in, they have to go out already. So it's better to stand aside.
We're talking with Charles Nenner, Glimpse into the Markets. It is nennerresearch.com or charlesnenner.com, right? charlesnenner.com.
charlesnenner.com.
And then you can go on there, and where do you find the 4-week deal? Let's see. Media, testimonial, pricing. Is that under pricing, media?
Pricing?
Maybe under pricing. And you can get the 4-week freebie deal, and people can see it. Yeah.
Pricing.
Yeah. People can. So you can't tell me where the big money is going to be made 6 months from now.
Well, the big money is going to be made, I will tell you, is going to be made one more time on the downside in the bond market. The dollar is not that, we talked about it before, the dollar is not as weak as you think it is. The metal, silver, and gold after the summer look good again. We're very long on natural gas. What else we have there? Crude oil is reasonably strong. I mean, it's like, I don't want to say it because things go up in cycles, up and down, and if you don't follow it, then I say something, and then people will buy, and in the meantime I write, let's take some profit for 3-4 weeks, and they don't hear it, and then they lose money.
Another Charles, he's in Cincinnati, wants to know, does your guest think that Bitcoin will survive any kind of regulations against them?
I have no clue. The only thing, it sounds boring, the only thing I can tell you is if it goes up and down, when it goes up, when it goes down, how much it goes up and how much it goes down. That's all what my work does. The rest I leave for the pundits because I have no clue.
You don't care about any of that stuff. You just look at the... Wow.
Because we just explained we're not looking for the facts, we're looking for the interpretation of the facts. And the interpretation is predictable. The facts are not always predictable.
It's so fascinating to look at it the way you do, Charles Nenner, because it's almost like I'm kind of a karma guy with cause and effect, but you're actually looking at the effect and then the cause comes. Or the apparent cause that people believe are the cause.
Well, let me give you one more example. You know the black swan theory?
Yeah, there could be something out there, a black swan that could happen rarely, and boom, the whole thing.
And we don't know what it is. So we were totally out of the market before the last swan thing. There was the virus. Remember, the market crashed.
Yes.
So I went on the media. I said, guys, stop talking. What is going to bring a market down if it does? Why did you spend money when it's coming down? I know it's when it's coming down. I don't know what the black swan is, but why is that interesting? And people continue to look for what is the black swan. We have to figure out what's going to do the market. And I know it's going to happen, but I don't know why, and I don't care. So they're looking at the wrong thing. So does the investor likes to know when it's going to happen, and that's more important than why it's going to happen.
Mm-hmm.
But they continue to bombard you with all kinds of analysis, why it's going to happen, and not when it's going to happen, and what is going to happen.
You know, from a spiritual and philosophical perspective, mystical, if you will, I'm really going to think about this, but I just kind of know you're onto something, because if you, I don't know, from my perspective, Charles, for what it's worth, we know that there is no time, and really time, and everything's just kind of happening now. So I can really kind of get where you're going with this and how you do this.
Yeah, on Sunday I publish like 20, 30 charts.
Mm-hmm.
That is just a printout of what I see on my computer.
Mm-hmm.
And then let's just take a chart. Let's take something totally different. Lumber.
Lumber
was, I don't know, was about 1600, 1700. I showed them the market tops. Let's get out. I think lumber is now around 700 in 6 weeks. He asked me why. I have no clue. But since I work with a lot of banks in Canada, they survived because there was lumber, and natural gas is very important because all these firms take loans from the banks in Canada based on the price of natural gas and lumber. And I have no clue. So if you look at my charts the next 4 weeks and you see a cycle bottoms, and we give you the exact day, write down the day. It could be a week away, 10 days away, and then see if it happens, and then listen to the media and read the newspaper, the explanation why it happened. And if you have seen this a couple of times, then you start doubting, does it really have to do with a news item? Because you have to print out and you know which day the market's going to turn around.
Right. Yeah, we saw that lumber price go crazy, right? And then we learned, we thought we knew the reason, and then they found that they were stocking a whole bunch of it, right? Just kind of trying to get the price up. They were just had billions of pounds just put away. But you knew it was going to go up, but you didn't know why.
Right, I didn't know why. So you have to make a choice. You want to know why, or you want to be rich. So, you know.
That's right. Do you know why?
Well, but you'd be surprised. You are surprised that a lot of people spend more time in why than figuring out how to make the money.
Isn't that interesting? Yeah,
interesting, right?
Yeah, we humans are like that, right? We want to know why. Well, why are they doing it?
Yeah. So that's why a lot of fund managers can be there for 60, 70 years, because if they lose money and the market goes down, it says, I didn't know what's going to happen. I didn't know there would be a virus.
Right. Yeah, I didn't know that was going to happen.
Right. So they always, who cares? So they always buy for you. And if it goes down, I didn't know there was danger. I didn't know anything. So.
Yeah, I never thought about that. That's fascinating. You have these people, giving you advice, and then if it doesn't do what they said they're going to do, I didn't know. I mean, how did I know they were going to blow up this ship, right? How did I know they were going to do that?
Right. Something happened. Nobody knew that.
Great. Do you have a name for your computer algorithm? Do you have a pet name for it?
No, I don't have a pet name. It's it's just horrible. The people it sounds strange that we have to help lately, especially with Bitcoin, the beginners that lost their shirt, and we have to get them slowly to maybe make back their money. And I'm very much afraid for people who are constantly in the stock market. If you ask them why in the stock market, I don't know, it's going up. It's not really going up. It's going up. They tell me it's going up. I don't. It's very hard to convince them. So that's why I say it's a learning process. Look at our cycles that we send out. The print out from the computer. It tells you exactly the day of the low and the day of the high. In the future, write it down and see if it happens. And if it happens, a lot of times, then we're up to something. And then maybe you start approaching investing in a different way.
Do you have different levels of subscriptions? Different levels?
Yeah, we have different levels. They're all in on the website. We have very huge clients. What does a huge client do? Let's say a big bank says, I want to buy Caterpillar, just mention something, right? We do fundamental analysis on Caterpillar. Can you build a cycle? Because we're not exactly sure when to buy it, at what level to buy it. And if we buy it for half a year, nothing can happen. And we're just sitting on it. So I built a cycle. I said, okay, you're going to buy Caterpillar. You did your work. You should buy it in this and this week at this and this level. So those are special requests. and they are more expensive than the usual research, and the intraday research is a little bit more expensive than the daily research.
Mm-hmm. Is there any is there any validity to the thought that I kind of have, and I just kind of curious, that if I understand central banks and fiat currencies and quantitative easing and the way, politics, geopolitics, for me, I just kind of know that the dollar is always going to be, they're going to increase the money system, right? The money supply. And I know that there's other reasons for inflation and the dollar going down, but long term, I'm still pretty good if I just think, well, I'm going to buy gold and put it in a safe, right? 10 years from now?
Well, I used to, I'm Dutch, so I'm a bit more, not as outspoken as American, but sometimes I was sitting in American office and I heard people say, who discussed about markets, is there anything that Mr. Nenner doesn't know? Mm-hmm. And he says, oh, I'm embarrassed, how can you say that? But what I would like to know is there anything that the market pundits don't know? Because we know it, and the dollar is reflecting what we know. If you know something that nobody knows, mm-hmm. maybe you have an advantage. But if you don't know something that anybody else knows, then it's in the price. So what you're telling me, I guess everybody knows, so it's in the price. So it's not an argument anymore.
Oh, I see. Everybody knows, so it's there. It's going to happen.
Yeah. It's already in the price.
It's already in the price. Wow.
Right. So all these things now don't help us because everybody knows these things. I mean, you have to be really, even in average Goldman Sachs, people don't know that. Maybe certain people that have insights, they know a little bit more than other people. But, the whole of the financial market knows, especially now in this age, knows the same information. So everything is in the price. So only if you can say, I know something that nobody in the world knows, they will have an advantage. Well, okay, so I'll be happy to meet that person.
Yeah, that's right. I want to meet you, right?
Yeah.
I want to meet you. And then, but we know that the gold and silver market, Charles Nenner, they're not free markets. They're always being held down and that, aren't they? From different forces?
Well, again, I can't help you. I can't tell you when it's going up, when it's going down. I don't know why. It doesn't interest me. My work is to tell you this day is the bottom. Yep. It goes up for so many weeks, so many months, and it goes up to that price. And I leave it to all the experts to say why it happens. Mm-hmm. The interesting thing is they don't know when it happens, and I think that's more important than why it happens.
Yes. Do you find that when customers get to the point where they really understand how you think and work, and they just go with it without understanding the why, that they do pretty good, or they do better than the ones that are questioning?
They're always questioning. I will tell you that if I give you an example. If I say I go from 100 to 200 and the cycle tops the 1st of January next year, and the 1st of January next year is at 200, they always first want to see if it's really going to top. They don't close their eyes even if they're with me for 20 years. And what happens is this. It's at 20, and then it goes down to 185. Oh, it tops. So now to get out, but let's wait for a bounce. But before you know it, it's 160 and it's still not out. So it continues to be a struggle for people to say, I just go with the system, I close my eyes, this is what the system says, and it says you're going against the odds. The odds are 95% that we're correct. Why do you do that?
It's hard for a lot of people just to trust the system or trust the way you do it.
Well, and also I published about it. It's for people. It's more painful to miss 3-4% on the upside than 40% on the downside. He just mentioned when I was at Greg Hunter, before the crash of the virus, I said on Greg Hunter, they can go to YouTube. I said the maximum that we can go up is another 3-4%, and we can go down 40%. And we went down 40%, and there were still people, even I took my research, who got killed because they wanted to pay the last 3% on the upside.
Wow. Yeah. Human nature.
Because they hear from it's very difficult if the market goes up, if the Bitcoin goes up, and it gets to 64,000. It's very difficult if everybody's enthusiastic to sit in a group of people on a burst. They say, listen, but I have research that says 64,000 is the top I'm selling. Well, look at you like, where did you come from?
Boy, you were on that Bitcoin top. You were right on it, weren't you?
Yes, but it's emotionally difficult to go against the crowds.
Mm-hmm. Is there a mechanism to short Bitcoin or short Ethereum?
I think you can go short. I heard people that can go short. It's easier. There are two ETFs. Ethereum ETF is ETHE.
ETH, yeah.
We followed that on the research, and GBTC on the Bitcoin. We followed that on the research, so it's like a stock. So that one you can short and go long. But I heard that you can also go short on Bitcoin. A lot of firms don't do it because they find it too dangerous, or the margin is so high it doesn't pay. But if you take the ETFs on Ethereum and Bitcoin, you really can go short the stock.
Yeah, and if you're just a real crypto nerd and you really believe the idea or the meme or the philosophy, because it's a limited number, it could go to 1 million. If you really believe that, you could buy this GTBC ETF Bitcoin and just hang in there, right? If you really believe it.
Yeah, but let's take it out the ETHE. We sold it, I think, around 42, and the price target was 16.50, and behold, it went exactly to 60.50. Now, let's say you wouldn't have had our research, so you lose from 42 to 16.
Yeah.
That's no joke.
Yeah.
Who has the stomach to say I'm going to be there for the $1 million, when my grandchildren go up? Not me.
Yeah. There's a lot of money to be made on the way up and down.
Yeah. It's horrendous. So, and I feel sorry for all the beginners who have no clue what they're doing, because we get them as clients every day and we have to help them out. And they don't even know there's a lot of knowledge around. So until they understand it, slowly, that we help them to try to make back the money that they lost.
Yeah, I understand. Well, Charles, you're a fun guy to talk to. Very generous with your time, and I appreciate that so much for coming on the show. We were able to make it work, right, with the Skype audio. We didn't get to see your smiling face, but anyway. But your wife is a lot more attractive than you are, anyway. But Yeah. Charles, when you coming back home in a few weeks?
In a couple of weeks, I think I'm going to Florida. First, I'm going to Amsterdam and to Florida. Depends if they take it seriously, the virus problem, because I don't think they take it very seriously in the United States. Here in Israel, they came down to 0 cases because they took it seriously. And for political reasons, I mean, Americans just have their own way of thinking, and
sure.
I don't think you can get the situation under control.
Yeah, I understand. But you live in Florida generally when you're here, right? When you're in the country, Florida.
Yes. I live in Florida, and I'm over 70 years old. I don't think I'll survive if I get sick, so I'm very careful. So it depends on what kind of things they're going to do now with the Indian mutation, if they take it seriously or not.
I understand.
And so the future, what we do right now in my family, is based on how the virus is reacting.
I understand. Well, you'll be fine. CharlesNenner.com. My best to Eliza. Thank her for all your help, and thank you for coming on the show. We'll keep in touch, and appreciate you coming on. It's really a pleasure.
Okay, we'll do it again. Be well.
Yes, sir. Be well. Thank you.
Bye-bye.
Charles. It's a trip, huh? I like it. There's something magical about, I think, the work where he doesn't really care. But I follow his stuff. I get his little market things every day, and I'll follow him and play around with him, and he's accurate, man. His little magical algorithm thing. I don't know how it works, but it does. Well, you know how it works now, but you can get a 4-week deal if you want to. We don't have a financial interest in promoting him, but I think he's doing great stuff, and we got to get creative here to do everything we can to survive and thrive with what the heck is going on with these bonker people playing all this stuff that they're doing. So I'm going to take a day off tomorrow. We've had a nice week. Thank you for your ongoing support. Appreciate it, really do. And we'll see you Friday. We'll have a lot to talk about and totally get into some trouble probably. And we're still on we're starting to build up on Telegram. So if you'd like to go to Telegram, you can find Patrick Timpone. Also, we're posting some things on Parler now. You can go to Parler, post some things. But join us on Telegram and Parler. And we also have the chat thing going on One Radio Network right on the top of the page. People haven't really figured out about it yet. It's just brand new, just a few days, but they will. You can start using it. But so I love you all very much. Thank you for your support. We have some good sales coming up on Shen Blossom and also Blue Shield beginning Friday night. We'll tell you all about them when we get together on Friday. And so when you have some of those extra dollars, as fiat currencies as they are, we appreciate that if you consider going to our website and looking at some of the products that we have. Some great things, the sauna, the air filter, and you know them all. And the hydrogen, it's a great product. Think about the hydrogen. It's a great investment. It's a really good product. You see all the promo codes. Sharon's got them all set up there, so we take good care of you, give you the best price we can for everything. So I love you. Thank you. This is Patrick Timpone. May the blessings be. See you Friday.
We are listener supported. One Radio Network.